Okay, in this video, we will cover 160, nearly 165, 160 plus MCQs from finance statements of corporate organization. Let's start. Business finance include procurement of funds and utilization of funds. Funds are required to purchase land and building, purchase of machinery, purchase of all of the above. Which report gives a review of the profitability. For profitability, we require an income statement. The term finance statement cover all. Right. Option C is the right answer. Profit and loss account and balance sheet. Which of the following is true about finance statement? Finance statement gives a summary of accounts, and the finance statements can be stated as recorded facts. Both A and B are the answer. P&L account is also known as a statement of income. Which statement shows the flow of cash and cash equivalents during the financial period. Cash and cash are equal during the financial. Option B, cash flow statement. Subtracting all expenses from revenue yields net profit or loss. Balance sheet of a company is required to prepare in the given format in Schedule 3, Part 1. Balance sheet. As per the company, balance sheet of the company is required to present it in what vertical format. The other following is not required to prepare under company side. Funds flow statement is not required to prepare under new company side 2013. According to the prescribed order of assets in a company's asset, non-current assets should be shown first of all. Non-current assets calls in appear in the company's balance sheet. Calls in arrears appear in shareholders' funds, and the calls in advance appear in current liabilities of the current liabilities. Bills receivable appear in company balance sheet of the trade receivables. Which of the following option is not recorded in the balance sheet? And balance sheet rent expense is not recorded in the balance sheet. Which of the given area is not addressed by the business finance? Financing, investing, managing data, all are three are addressing in business finance. So option D is the right answer. Which of the following is measured by profit margin? Operating efficiency is measured by the profit margin. Business finance address which of the following? Capitalization, capital, all of the given options. Working capital management also. Finance is vital for which of the following business activity? Finance is vital for which of the following business activity? Marketing research, product pricing, design of marketing and distribution channels, all of the given options. So finance is vital for marketing research, for product pricing, for design of marketing and distribution channels. Question number 20. Finance is vital for which of the following business activity? Marketing research, product pricing, design for marketing and distribution channels. So all the three are right. So the answer for the question is option number D, all of the given options. Which of the following refers to difference between sale price and cost of inventory? That is markup. Which of the following makes a broad sense of accounting information? Financial analysts, financial analysts. Which of the following statement is considered accounting snapshot of the firm's accounting value use of a particular date? Date means balance sheet. Balance sheet is based on which of the following formula? Assets is equal to liabilities plus stockholders' equity. The conflict of interest between stockholders and management is known as agency problem. Which of the following is not an example of intangible assets? Building. The following are the items of financial assets except raw material. Business finance refers to dash and dash employed in a business, refers to money and credit employed in a business. Business finance is concerned with the estimation of funds and raising of funds from different sources. Which of the following is not a function of finance manager? Manipulate share price of the company, so mobilization of funds, deployments of funds, and control for use of funds. It is a lot of the functions of the financial management. Which is the following main decision taken by the financial manager in a company? The main decision taken by the financing decision. Finance function comprises safe custody of funds, expenditure of funds, procurement of funds. Procurement and deputy use of funds is the main function, is the main function of the financial manager. The financial manager is accountable for he is accountable for arrangement of financial resources, effective arrangement of funds, arrangement of financial resources, The focal point of financial management in a firm is the creation of value for the shareholders. Option number C, the creation of value for shareholders. The term financial statement refers to income statement, cash flow statement, and funds flow, balance sheet. All of the above or the all of the above given options or the can refer as finance statements. Which is the main object? Which are the following the main object of finance statement? To know the solvency, to know the debt capacity, to know the earning capacity. So option D is on all. The fixed is shown at market price. Which are the following are preparing finance statements? All accounting conventions, principles, and concepts all we are follow to prepare the finance statements. The stock is valued at cost of market price, whichever is less is the base of accounting convention. The balance sheet shows of working capital, no. So the change in working capital, no. The analysis and interpretation of finance statement will reveal the financial department profitability. So option D, both are the right answer. Both. The process explaining the meaning, significance, and relationship between two financial factors called interpretation. The process of comparing various financial factors of a company over a period of time is known as intra-firm analysis. Which of the following is technique of finance statement analysis, common size compared to trend analysis, or dash is simply the amount of cash coming into the business, cash inflow, cash flow. Cash flow is simply the amount of cash coming into business. If the value of opening inventory increases, what happens to the value of gross profit? Decreases. Incorrect cash flow planning. Incorrect cash flow planning can lead to bankruptcy. The analysis of any finance statement comprises balance sheet, P&L account, trading account, all of the above. Which are the following techniques, are tools, or methods of analysis and interpretation of finance statements? Trend analysis, ratio analysis, and average analysis, all of the above. Interpretation of accounts is the art and science of translating the figures to know financial strength and weakness, to know the cause for the prevailing performance of business, all of the above. The major device for measuring the profitability of a firm over a defined period of time is the income statement, balance sheet, statement of cash flow, and none of the above. The major device for measuring the profitability of a firm. Profitability means income statement to know the profitability. The dash does not represent continuous operations in any way, but is simply a snapshot of the total worth of the format at a given point on time in balance sheet. The balance sheet does not represent continuing operations in any way, but it is simply a snapshot of the total worth of business at a given point of time. Cash inflow arises from decreasing assets, increasing liabilities, and increasing stockholders' equity. Which of the following is not a key ratio in the prediction of bankruptcy as developed by Edward Altman? Prediction of bankruptcy. Edward Altman. Okay. Current ratio, total assets, retained earnings as percent of total assets. Debt to equity is not the key ratio in prediction of bankruptcy. Dash analysis is the process of studying a series of ratios for a company or industry over time. Series of ratios. Studying the series of ratios. Trend, I think. Trend analysis is the process of studying a series of ratios for a company or industry over time. The statement of cash flow tells us how cash was created. The primary section of statement of cash inflow or cash flow from operating, investing, and financing. Next, which of the following are non-current assets? Land, building, leasehold property, companies of all of the above. Funds flow statement are prepared so as to identify the changes in working capital, to identify reasons behind changes in working capital, to know the itemized out of flow of funds during the given period. All of the above. Financial statements are Recorded facts. Trend analysis is significant forecasting and budgeting, profit planning, capital rationing, working capital management. So the right answer is profit planning. Trend analysis is significant for profit planning. If the in the common size income statement analysis, which is taken as 100% sales. Compare statement analysis is horizontal analysis. Financial statements are meaningful and useful only when they are analyzed and interpreted. Vertical analysis is made on the basis of single set of financial statement. Horizontal is done by analyzing financial statement of horizontal is done by analyzing financial statement of particular year. Horizontal analysis is done by analyzing financial statement of particular year. When the concept of ratio is defined in respect to the item shown in the financial statement, it is referred as accounting ratio, financial ratio. When the concept of ratio is defined in respect to the item shown in the financial statements is financial ratio. The ratio between two financial variables can be expressed in ratio, percentage, rate of time, all of the above. Stock is considered as a liquid asset as any time it can be converted immediately. Stock is considered liquid asset as any time can be converted immediately. Yes or no? No. Why? Written on proprietary funds is also known as written on net worth, written on shareholders funds, written on shareholders investment. What will be the gross profit? Total sales to less the cost of goods is sales written is 10 lakhs. 50,000 by 2 lakh 50,000, 20%. Which of the following is not including current asset? Stock. Liquidity ratios are expressed in pure ratio form. Liquidity ratio, current assets by current liabilities. That's enough. Pure ratio. It's not in percentage. It's not right. At times, 2:1. Working capital turnover ratio can be referred by gross profit. Working capital turnover ratio can be determined by gross profit working capital. Mhm. Cost of goods sold by working capital, right? Determine working capital turnover ratio. Current assets, current liability, and the cost of goods sold is working capital turnover ratio. Working capital turnover ratio. 3 lakh divided by 50,000, 6 times. 3 lakh divided by, so this option is wrong. Cost of goods sold by working capital is the right answer. Option C, the right answer, or not option A. Profit for the object of calculating a ratio may be taken as profit for the object of calculating a ratio may be taken as profit before tax but after interest, profit before interest and tax, profit after tax, all of the above. Sales, net profit, the net profit 1,20,000 by 5 lakhs, 24%. General profitability ratios are based on sales, both A and B. Profitability ratios are based on, generally, profitability ratios are based on sales. But what about investment, return on investment, return on capital employed, return on equity? These all are based on investment. They're not on based on the sales. So both A and B is most appropriate answer. Discount of turnover if opening stock, closing stock given, sales given, gross profit ratio is given. Stock turnover ratio from the cost of goods sold divided by average stock. Simply we can calculate. The ratio which reveals the final result of manager policy the performance is called which reveals the final result manager policies and performance. For performance profitability ratio, return on investment is a profitability ratio, net profit is a profitability ratio, stock turnover is a turnover ratio, current ratio is a short-term solvency ratio, proprietary ratio is a long-term solvency ratio, fixed assets ratio is a long-term solvency fixed assets turnover is a turnover ratio, the rate which makes the profit ratio, capital employed is a return on investment, return on equity is also called as return on net profit, criminal expenses in an example of it is prepaid expense an example of current asset ratio which is calculated to measure the product of total assets. The ratio which is going to measure the product of total assets, return on total assets. The ratio which is the proportional profit retained in business out of the current year profit. The ratio shows the proportion of profits retained. The ratio shows the proportion of profit retained earnings ratio. The ratio establishes the relation between profit before interest and the fixed interest charge. The profit before interest and the fixed interest charge. Interest coverage ratio. The ratio is preference dividend proportion of profit available to shareholders. Fixed dividend coverage ratio. Fixed dividend coverage ratio. The dividend is the market value of shares in dividend yield ratio. Turnover ratio is also known as attributed interest stock turn ratio for stock velocity. Stock velocity ratio. The ratio between the additional cost of goods and the amount of average stock turnover ratio. Sales management product of the cost of goods sold. One at one question. Opening stock plus purchases plus direct expenses minus closing stock is cost of goods sold. The which ratio measures the number of times the receivables. Data turnover ratio. Data turnover ratio is also data velocity ratio. Credit turnover ratio is also accounts payable ratio. The primary purpose of the liquidity ratio is to determine how well a firm is able to pay out short-term obligations. So the following statement about liquidity ratio is true. Higher the current ratio, the more likely a firm is able to pay short-term obligations. The ratios help determine the degree of financial risk and earnings volatility present in a firm. The dash ratio helps to determine the degree of financial risk and earnings volatility present in a firm. Liquidity కాదు ఓకే అసలు profitability ఎందుకు కాకూడదు why the profitability wouldn't be it couldn't be why the profit wouldn't be the dash ratio which ratios helps to determine the degree of financial risk. Leverage ratios. Yes, leverage ratios. And earnings volatility. Which of the following statements are true? Debt to equity and debt to total assets measures capital structure and vary widely among industries. Debt utilization ratios alone does not measure a firm's ability to meet its cash obligations. Due analysis consider the impact of debt. The two are the above. Due analysis consider the impact of debt on profitability now. Capital structure, debt utilization alone does not measure firm's ability to meet its cash obligations. Debt equity ratio is a subpart of not the long-term solvency ratio. The most precise test of liquidity is absolute liquid ratio. Liquid ratio given current ratio given current liabilities again given determine the value of stock we can easily find out. Statement of cash flow includes operating, financing, and investing. In cash flow, when a firm invests fixed assets and short-term finance results in invest fixed assets and short-term finance results in decreased cash. A firm that issues stock and bonds to raise funds is increasing cash. The purchase value of asset over serviceable is categorized as depreciation. Over serviceable life is the purchase value of assets over its serviceable life is categorized as depreciation. The the basic appreciable level depreciation. The basic finance statement include all of the above, like income statement, balance sheet, and cash flow statement. The cash flow example from a financing activity, cash flow financing at payment of dividend, receipt of dividend, no cash receipt, no purchase fixed asset. Cash flow example from investing activity, sale of assets by non-financial enterprise, cash flow for operating activity, operating interest paid on term deposits by bank, and the purchase value of assets over its serviceable life is categorized as cash flow example from a financing activity, payment or dividend. Cash flow example for investing activity, sale of investment by non-financial cash flow example from an investing activity, sale of investment by non-finance enterprise, non-cash flow for an operating activity. Purchase of own debentures, financing, sale of fixed assets, investing. But the question asked about operating activity, interest paid on term deposits by bank, issue of equity share capital, financing, interest paid on term by bank. Which item comes under financing activity in cash flow? Financing redemption of preference shares, issue of preference shares, interest paid. As per accounting standard 3, cash flow is classified into operating, financing, and investing. Cash flow statement is also known as statement of change in statement change in financial position, cash flow statement of accounting for variation okay, both and B. The object of cash flow statement is comparing our operating performance versus cash position short term. The object of cash flow statement is comparison of operating performance. How can it be the objective? There is a so I think there is a problem in the question number 123. Comparison of operating performance. I think is let's go to discuss. Sorry, cash flow statement is based on cash basis of accounting, which is cash basis. Which are the following statement are true? Cash flow reveals only the inflow of cash. Cash flow reveals only the outflow of cash. Cash flow statement is not is not a replacement of no is not a replacement of outflow statement. In case of other enterprises, cash flow arising from interest paid should be classified in cash flow from. In case of other companies, cash flow arising from interest paid should be classified in as class 4 interest paid financing activity, while the dividend and interest received should be stated in cash flow as dividend received interest as investing activity. When a fixed asset is brought as hire purchase, interest element is classified under dash and loan element classified. When a fixed asset is brought under as the interest element is classified under financing activity, and the loan amount is classified as investing activity. Interest paid, financing activity, and the loan amount is classified as investing activity. So the following statement are false. Whole furnishing write-off does not affect cash flow. It's false. Cash flow statement is a substitute for cash account. Yes, is false. Is not a substitute. Is false. Remember to net cash flow during a period can never be negative. Appreciation of retained earnings is not shown in cash flow statements. Which of the following is not a cash outflow? Increasing creditors. Cash flow statement is prepared for the financial planning of short range. Which of the following is a source of cash? Sales of goods is not a source of cash. Which of the following is not a source of cash? Purchase of machinery. Which of the following is not application of cash? Increase in bills payable. Actually, it is receiving. If 6% preference shares capital 12 lakhs were redeemed at a premium of 5% while preparing cash flow statement, its effect on cash flow will be cash used for payment for financing activities 2 lakhs 10,000. The amount of goodwill is 40,000 on the beginning of the beginning of 40,000 at the end of the year. That then while preparing cash flow statement, its effects on cash flow will be cash used in investing activity 8,000. How will you deal increase the increase in the balance of securities premium reserve while preparing a cash flow statement? Se- Securities premium, cash flow from financing activity. A Limited engaged in the business of retailing of two-wheelers, invested 50 lakhs in the shares of manufacturing company. Dividend received on this investment will be investing activity. How will you treat bank overdrafting cash flow statement, cash flow from financing activity? When will you show purchase of goodwill in cash flow statement? Cash flow from investing activity. How will you treat payment of interest on debentures or preparing cash flow statement? Financing activity. State whether cash deposit in bank will be classified which kind of activity, no cash flow. A company has to prepare its balance sheet once in a year. Income statement of business shows net profit, net operating the specific period. Net operating resulting of a specific period. The statement shows a period increase or decrease of funds is called funds flow. Funds flow statement is based on the concept of going concern. Fund means any form of financial resource. Which of the following is the component of current asset? Which of the following is the component of current asset? All the above. The term fund flow of fund refers to change in fund, change in working capital. Transaction between dash may cause the flow of fund. Transaction between current assets and fixed assets. Current assets and liabilities. All of the above. The term current account refers to current assets and current liability. See both. The term non-current account refers to capital and long-term liabilities comes under non-current account. Share premium, share forfeited, P&L account, balance of profit are all origins of permanent liabilities. The funds flow analysis is primary importance to financial management. Funds flow statement is considered a tool of financial analysis. Who is the funds flow statement widely? All of the above. Basically, the funds flow statement show the causes of change of assets and liabilities both during the period. The sources of the funds flow statement show the internal sources and external sources. See, funds flow statement is suitable. The sources of side of fund flow shows the dash source of funds are from internal and external. Funds flow statement is suitable. Statement is substitute for none. Which of the following original statements? Finance statement. Which of the following statement dynamic in nature? Funds flow statement. Funds flow statement is a complementary to balance sheet and income statement. Which of the following is source of funds? Issue, raising of long-term loans, solar fixations, all are the source of funds. Which of the following is an application of fund? Fund lost in operation. What is meant by funds from operation? Operating profit. Working capital requirement depend on credit policy of both supplier and company. These are the 165 questions from the analysis of the finance statement. Thank you.